Hello, everybody. Welcome to our webinar today. We're glad to have you. We've got about 35 attendees along with the 9 panelists. I hope everybody can hear me okay. Happy belated International Women's Day from WOCCU. We debated whether or not to include this yesterday or today, but we decided with so many credit unions around the world holding their own events that it would be better to actually hold the webinar today. My name is Dylan Butler. I'll be your MC today. We're very happy to have you. This is a very diverse community. We have representatives from credit unions around the world, as well as practitioners of international development. So thank you very much. We appreciate taking the time. I will transition over to Megan. So welcome.
Hello, everyone, and welcome. I'm Megan O'Donnell. I head up WOCCU's international project. As many of you know, credit unions play a unique and powerful part in delivering finance to people all over the world. And the role of gender and what we are calling introducing a gender lens is crucial in each case. In many countries, credit unions reach communities deep into underserved areas where commercial banks don't go. So for many women entrepreneurs and women, credit unions provide one of the only sources of capital to run their businesses. As many of you know, an important part of our work here at WOCCU is our development projects. And in one of our projects, we're going to examine this role of gender in Senegal in our credit unions and really do a deep dive into this issue. Today, we want this to be an interactive session. We will present our findings to you and our observations from our work so far in Senegal in this past year. But we want to hear from you, whether you are seeing the same trends, what your data looks like. We're trying to make this very evidence-based, and we want to really source our findings from our partners around the world. So, our credit union partners and others as well. And as you will hear, we're joined by many of our colleagues from across the globe, through our credit union members, and from Ukraine, Peru, Senegal. So please do ask questions as we go along, make comments in the Q&A or the chat box, or please follow up with us afterward. This is an ongoing piece of work we're doing here, so we really want you as the community to be involved.
Thank you, Megan. As Megan said, this is meant to be interactive. I actually put a note in the chat as well. You're welcome to send messages directly to the panelists, or you can obviously put messages for all to see. We're going to hopefully be hearing from also some of our WOCCU members today in Ukraine, in Peru, hopefully in Kenya, Ghana, Senegal as well, of course. So we will, but we also encourage anybody who would like to speak to put a comment in, and we'll see how we can accommodate. Just a quick couple of notes as well. The first half an hour or so is going to be mostly introductions to our work, and we're going to try to set the stage for the webinar. I just got a note actually that our chat is getting very busy. So if you have actual questions, actually, please just put them straight in the Q&A. We'll reserve the chat, or the Q&A function. So we'll just reserve the chat for introductions and people saying hello. Next slide, please. So with that, oh, I'm sorry, I forgot to introduce everybody. Yes. So Megan O'Donnell is going to be our is our senior vice president here for WOCCU Finance. She's our vice president of international programs and is also financial inclusion here at WOCCU. We're pleased to welcome Wade Channell, who's our senior economic growth advisor for gender at USAID. We're also happy to have Sophie Romana. She's an independent GLI consultant and advisor to our project. All three of these are people and individuals are very important to this project and the success of our work. I am the program development manager here at WOCCU. I also manage the Senegal project. So we're again very pleased to have you all. Now the next slide. Sorry about that. I want to make a quick note also before we begin. For credit unions, we'll hear a lot of GLI, and you'll hear a lot of gender lens investing, the acronym for gender lens investing, GLI. I want to be clear that when we say investing and we mean it in the credit union space, we actually mean a lot about finance. So financing small businesses, financing entrepreneurs. We don't necessarily mean, investing as equity investors or whatnot. That is a big piece of what is GLI, as Wade will soon talk about. But for our purposes as credit unions, we're talking about finance. So please remember, when you hear those terms, just think of them as interchangeable. So with that, it's my pleasure to introduce Wade Channell. Welcome, Wade.
Thank you, Dylan, and thank you, Megan. I'm really pleased to be here. I've had the honor of working with WOCCU to ensure that we have at least part of this work is funded by USAID under our Women's Economic Empowerment emphasis, and we're thrilled to be seeing this. I'll just tell you personally, I go ahead and, full confession here, I didn't really hit the credit union thinking for a very long time. This is new to me. I focused mostly on banks and the standard finance of that sort. I am really pleased to see this work moving through credit unions, and especially with WOCCU, with the massive number of members and the network that WOCCU has. I think we can have a tremendous impact. But very briefly, just to say, what is gender lens investing? It's one of those terms that has taken on more meanings than it can hold, and they're different for everyone. So I'm going to try to pull it in a little tighter. I'll read you a definition and then talk about it just a second so you can get a sense of where we're going, and more than that, what the opportunities are in this space. But one of the definitions I found, and there are many out there, we don't have an official one, GLI, gender lens investing, is defined as a strategy or fund that seeks to invest in gender smart businesses. Well, frankly, I find that pretty useless because we just went from gender lens to gender smart, so now we have to define that, but I'm going to skip that and say how this is intended to be read, which is that this is where commercial companies actively participate in gender lens through investing in women-owned or women-led businesses, in workplaces or supply chains that support gender equity, or in enterprises that produce products that substantially improve the lives of women and girls. Additionally, engaging in approaches that inform investment decisions, or finance decision, as Dylan has said, such as a process or strategy that focus on gender, are practices of GLI. All clear? If it is, please write me and help me feel more clear about that. That gives you a really broad range. So let's pull it in. Let's make it simple. Let's put it this way. If we don't design with women in mind, we are designing for men. If we don't invest or finance with women in mind, we are financing or investing in men. Gender approaches, gender analyses, gender concerns are fairly new on the historic stage. And until very recently, pretty much all finance was designed by and for men, not necessarily deliberately, but men were doing the work and women weren't involved. That world has changed. It's not over, but it's passing. And this is our chance to hurry on a better world that considers women at the core of what we do. When I look at it, procedures, practices, policies, products, all have gender dimensions. We may not see them at first, but once you start looking, you can't stop seeing them. And although historically to date, we haven't, the change is really dramatic and the impacts are dramatic. We're seeing Wall Street change its own investment policies and strategies to ensure that women are in leadership on boards and in management in companies because they're finding that those companies do better. So that's one area, that's that equity investment area. But overall, we're talking about investing our resources, whatever those may be, with women in mind, in companies that women own or lead, in shaping our own companies or the companies that we finance to ensure that they actually pay attention to gender within their work. Are they gender blind? Because I will tell you, in our world, there is no gender neutrality to speak of, very seldom. There's a lot of gender blindness. There are gender impacts on everything, but also investment and financing for products and services that really seek to address the needs of women. I'm a big believer in markets within the limitation that they are flawed because they involve humans, and we are a flawed group overall with lots of great stuff and some human nature issues that can tend to make a mess of things if you ever read the newspaper. But the business of business is serving human need. The business of finance is serving human need. we haven't included enough women in that human equation for far too long. And this movement, and it really is a movement for gender lens investing, gender smart investing, whatever you want to call it, is to ensure that we're no longer working blindly, but we're working to ensure that women are at the core of what we do, not just an average statistic that gets muddled in with other average statistics, but real individuals with real needs that often differ from the needs of men. And if we don't recognize that, we only will serve one set of needs, and that's not going to work on either side. So with that, I turn it over. I'm very much looking forward myself to hearing what's been happening in Senegal with just an outstanding program that will highlight some of what we're talking about here. And I offer you the charge and the invitation. Let's do this. Let's change how things are working, and let's listen to our colleagues from WOCCU right now and telling us what they're up to. Thank you.
Thank you, Wade. Much appreciated. So for those who, just waiting for the next slide. Thank you, Jack. For those who aren't familiar with WOCCU, I know that we have a lot of our credit union members on here as well, but for those who are not familiar with WOCCU, we are the apex association of credit unions worldwide. We put financial inclusion and credit unions at the core of what we do and who we are. As you can see on the side, there are a few statistics. There are 86,000 credit unions in our network. These 86,000 credit unions reach 291 million members. And this is not inclusive of all credit unions. These are just the ones that are in the WOCCU, the broad WOCCU network, in 118 countries across all 6 continents except for Antarctica, obviously. We, as WOCCU, operate 3 distinct branches, if you will, departments, but they are very much intertwined and aligned. The first is we have a team that manages advocacy issues and regulatory concerns. That's what a lot of obviously the credit union members contribute to. We have a branch that deals with professional development and networking, and we'll actually highlight one of those initiatives later on in the discussion. And the third one is our international development portfolio. I believe we currently manage about 5 projects, but we've been managing USAID and other donor-funded projects for almost 40 years, I believe. All of which, as I said, put credit unions at the forefront of development. So that's either through association building, capacity building of credit unions, to actually, we have innovative programs right now for Ecuador, looking to put credit unions at the forefront of transitioning people who are in need of humanitarian assistance to development assistance. So we have a lot of great portfolio. Now I'm going to leave it over to Megan to actually talk about why is gender equity important.
Thank you, Dylan, for the introduction, and thank you, Wade, as well. That gives me a good place to start from. So why is addressing gender equity important? And just to start, it's not just about women's issues. It's really about the relationship between men and women, and that when you unpack some of the evidence, you see the trends. I like how Wade put it, once you start looking at the differences and really unpack the data, you can't stop looking. And the statistics get muddled in together, and averages out of averages. Once you start unpacking the gender issues, it's you get a completely different picture of the world. So why is it important? There are a lot of studies showing the societal benefits of gender equity, but there are also very clear business and economic benefits. For our credit unions and our communities, our goal here was to show how to take advantage of this new lens that we're introducing, so you can take advantage and get more business and economic opportunities. So these are the 3 levels that we unpacked. How do we define gender equity, and how do we actually look to improve it? So these 3 levels. The first one, we looked at credit performance. We looked at loans given, the terms of loans, the value, the performance of these loans, and really understanding from the credit union perspective, what is the data saying? And on the second level, looking actually at the women's business level. How do women entrepreneurs, what do they need? What are they not getting? What is their level of formality in terms of being organized with documentation? And the third level look at is leadership and networking, in the sense of, this is the professional, this is the people working at the credit unions, the people serving on the committees and in the leadership. And as we all know, credit unions are different from other members of the financial sector in our governance structure, that we are member owned. It's a very different structures. So there are different opportunities for women's leadership within that. So one of the things we really wanted to do was look at evidence, look at data, look at trends. So we started out in Senegal, and we unpacking work with our partner there. And so this is how we structured it, and we're looking at this as a framework that we'd like to apply elsewhere as well. But we are starting out by looking at Senegal.
Thank you, Megan. Megan will jump back in really quickly. The big question here is why Senegal, and why the Union des Mutuelles du Partenariat pour la Mobilisation de l'Épargne et du Crédit au Sénégal. Hope I said that as well as I could. I did get a question about translation, and we're sorry we are not able to do real-time interpretation today, but for those of you who would like to hear an update or for us to communicate with you directly, we obviously are working with the PAMACAS, and we'll be glad to do something similar with you all in the appropriate language in another time. So brings me back to the question of why Senegal, and it has to say that I know a lot of you have been watching the events in Senegal in the last few days. We obviously don't know what the outcome will be of some of this political disruption, but we just wish our colleagues at PAMACAS and our obviously members and our Senegalese credit unions the best. We hope safety, and that this situation is able to resolve itself peacefully. So obviously prior to the events of last week, Senegal has been a very stable country for a long time. It has a national gender strategy. The implementation is nascent and not uniformly implemented, but it puts equality, equity at the forefront. This is actually the second iteration of what we call the SNEAG, as you can see in this photo right here. The total membership of Senegal is almost 3 million members. And when we say 33.83% penetration, we mean 33.83% of the bankable population. So that is obviously not everybody in Senegal, but you can see that there's actually a lot of individuals who are members of credit unions there. PAMACAS is a very strong member. They have a national diverse network. As you can see on the chart on the right, that's where all of their branch offices are. It's a diversification between rural and urban, which is something we really wanted to select when we were looking at countries, is having that diversification, so we could kind of pilot and look at the issues that plague an urban environment versus a suburban versus a peri-urban and a rural. And in our process, we've actually selected 4 credit unions to pilot, and all 4 of them come from one of those distinct geographies. So we have one basically downtown Dakar, one in suburban, one in peri-urban Dakar, and another one actually in Kaolack, which is, if you look at the map, it's pretty much right in the center of the country, and that caters to a rural population. And this quote that you see on the bottom actually came from one of our pilot credit union directors. And I think this quote really sums up a lot of what Wade was saying earlier, that rural development will not happen without investing in women. And we take that to heart, and we really appreciated that was something that came directly from our credit union. So thank you. Now we're going to transition over to both Megan and Sophie to sort of talk through the program and some of the lessons that we've learned.
Thank you, Dylan. So this first area of credit performance. So we looked at the numbers. Evidence really shows that women in our credit unions in Senegal demonstrate a lower credit risk. So we analyzed the data of the aggregate portfolio of credit unions, the 4 that Dylan just mentioned. And women have a consistently higher performing loans. So this is measured in terms of lower portfolio at risk, And if you look at this box on the right here, I think this is quite stark. So the portfolio at risk, for one, is the percentage of the gross loan portfolio that is overdue. So that's a measure of the performance. So the PAR 30 means what percentage of loans are overdue at 30 days, and PAR 90 is what percentage of loans are overdue at 90 days. So you want this percentage to be lower. And this, as you can see, for PAR 30 for women is 6.2 versus 8.9% for men. And at PAR 90, it's an even bigger disparity from 2.6% for women and 4.9% for men. And I'm very curious whether this is a trend that others have seen in other countries, in other parts of Senegal, because in these 4 credit unions, and this is, these numbers are an average, but the trend is in all of the different loan types as well. There was not, this is not an average of some being greater and some being lower. The trend of women being this amount lower was across 5 different loan types that we looked at these 4 credit unions. So to me, this was quite interesting. And the cost of risk, which is another measurement metric that we look at, basically how much does it cost the credit union to service a loan? We did a calculation for this data, and we found that the cost is 0.8% of the loan value for women versus 2.94% for men. So significantly lower cost. But at the same time, women lack access to capital. And the data shows that as well. Why is this? You would think if a product were more expensive for the provider, that they would choose the less expensive route, but they don't. So I will, this is one of our findings, and part of our project is to figure out why and unpack this. So I will hand it to Sophie now to talk a bit about why we think this is.
Thanks, Megan, and thanks, Dylan and Wade, for all the introductions for this project. And thank you for inviting me to participate in this project. I love it because I've been working in women's financial inclusion for years and finding ways to increase women's access to capital and supporting their ambition and endeavors as women entrepreneurs is something I'm really keen on doing. So to try to understand why women are at such a disadvantage when trying to get some loans to finance their entrepreneurial endeavors, we used a host of techniques. We did focus group discussions with some members and asked them. We spoke with the credit union staff, with the credit agents, with the credit committees. What we find first is that generally, and I don't like to generalize, but in our conversation, I think it'll be useful. Women lack collateral, and I'm going to assume that it's something that all our colleagues from different credit unions and even microfinance institutions are quite familiar with. Women don't have access to land as much or as often as men do, or real estate. Similarly, they don't accumulate wealth as fast as men do. We see that also in the savings portfolio of credit unions and microfinance institutions. So the lack of collateral puts them at a disadvantage. But PAMECAS has decided that they would try to offset this disadvantage by offering a group loan to women who didn't have enough collateral. And the group loan brings the solidarity of the group members at play when women don't have enough collateral to be an individual borrower. This is a really interesting solution that PAMECAS has been implementing. However, by being in the group loan, you're liable to your colleagues defaulting, which would put you back, because if somebody defaults in your group, the next loan that the group will be able to access will be smaller. It also makes you invisible to the credit staff, to the credit agents, and to the credit union staff, makes you invisible as an entrepreneur. So if you're a talented entrepreneur with ambition, with a good business model, and your activity can be grown, it's hard for them to see you. And this is also linked to the fact that most of the women operate in the informal sector, and they don't have the track record or the documentation that they need also to access loans. So when they walk into a credit union to ask for a loan, they don't have anything to show about their business. They can tell and they can say and they can share their results And they're usually very savvy at calculating their own profit and benefit and giving you a good story, but they don't have the data. The second thing we've noticed is that because they're in the informal sector, the loan is given to her as an individual, as a person, not on the basis of her business. And in some cases, we found that there's an automatic almost reaction saying, this is a woman coming into our credit union. We have products that we've developed for women. We're going to give her that product. And sometimes this can happen quite quickly. The credit agent doesn't have enough time to assess the proposal or the business, and her business is overlooked. So again, trying to figure out how can we make their businesses more visible. And we'll talk about that in the second lever. We also found, talking with women, that their loans, the loans that they're able to access are small. And they're so small that they need to contract multiple loans from different financial institutions. We spoke to a woman who has 5 loans currently from 5 different microfinance institutions and credit union, a mix. And she's constantly juggling payments. So on Tuesday, I need to pay the loan with this institution. On Friday, I need to pay the loan on that institution. It's extremely exhausting to finance your business like this. And it doesn't, it takes energy away from your investing in your business. You have to manage those financial lines of credit all the time. We also found that there's no syndication in Senegal. There's no way to syndicate those loans so that women could have access to a bigger credit. PAMECAS does it at the network level. Directors of credit unions call each other and try to find solutions for women when they have exceeded their ceiling or their loan that one credit union can give. So they're really trying to find ways to support women. But overall, we also see that men, as I said earlier, have more alternatives. They can choose. They can choose to go to a credit union. They can choose to go to a commercial bank. They have land. They have real estate. They have more cash. And cash is great when you need to bring collateral. So this disparity is really very strong in the collateral issue that women are facing. While we looked at those numbers, we also looked at different steps in the credit process. So with colleagues from PAMECAS, we have started to look at unpacking the whole credit process, from the application to the qualification, the approval, the assessment, the disbursement. And in each one of those steps, you could find ways that women are put at a disadvantage. So for instance, the loan application can be hard to fill out if you're a woman living in a rural area with a lower level of literacy. It can be intimidating. The qualification can be hard to understand. Sometimes women have told us that they've asked for a certain amount for their loans and received a different one, a lower one, usually with no explanation. And that's really hard for them to understand. And also they have no recourse. The approval process similarly can be difficult to understand because there are different levels, and the credit committee plays an important role. And we've noticed that the credit committees at PAMECAS have, in the 4 credit unions we're working with, have a different representation of women in all the 4 credit committees that we've looked at. And finally, the assessment of the business, making sure that they're on time, that their business is doing well, the relationship they establish with their credit agents also can be at risk. And the disbursement, we haven't looked at the disbursement rates. I am very curious to understand if the disbursement rates are the same for men and women, if there's disparities there, and what can we do eventually to make sure that they get the money they need on time, which is a big issue when you're an entrepreneur. So we're looking at different ways to improve the way PAMECAS works with women in their portfolio. So the first one would be the alternatives to collateral. And we know, for instance, that other organizations bundle the collateral into the loan. So when you contract a loan for 100,000 CFAs, for instance, you may be able to contract for 125, and the 25 would represent your collateral. The other way that we're looking at is to support women entrepreneurs and make them emerge from those groups so they can access individual loans that tend to be at a higher level than group loans, and make sure that the credit agents they work with evaluate their business, not just their personal financial profile, if you will. We also, in several conversations, realized that the credit agents don't necessarily understand the business women are involved in along the agricultural value chains, or that some businesses that are typically feminine, for instance, a hair salon or a tailoring shop, can be discounted by credit agents, are not as worthy as a business as, let's say, a construction business that a man owns. So looking at those disparities and making sure that we focus on the business and on the data that the business generates and not necessarily just what it does. So together with PAMECAS, we're working on tweaking the credit agent role and using their relationship both with the credit committee, and because we think the credit committee plays a really important role. So their relationship with the credit committee and the members to increase their gender lens in what they're doing. So we're going to tweak a little bit their objectives, their goals, and train them. We've already started doing that by sharing with them a business case for why it makes sense to invest in women. How companies, as Wade was saying earlier, how companies who have diverse teams just do better. And we need to make sure that we make that business case throughout the staff at PAMECAS. The other thing we're doing is demonstrating the value add of gender lens to credit union senior leadership. And to do this, we have started designing a gender dashboard for the credit committee, because they told us in one instance that they didn't know how many loans they had given to women. They didn't know for how much, and they were curious to track this. And by helping PAMECAS put the spotlight, if you will, on what they already do in their portfolio and how many women entrepreneurs they already support, it will make the issue rise and validate the fact that investing in women is good business, basically. And finally, we're going to observe.
Question, Sophie.
Sure, sorry.
No, that's a good question. How many loan underwriters, credit agents are women themselves that you're finding?
So that's a very good question. PAMECAS has a pretty evenly distributed staff, but I think men are still dominating in the number of credit agents. One of the issues we asked mainly was the number of women who are directors of a credit union. And there's very few because of family issues. They don't want to move out of Dakar. It's really difficult for women to experience the same mobility than men. So they're able to hire credit agents locally, but growing them through the management is a bit harder. Is there another question?
There's a question from Lena. I'm sorry, Lena, I can't pronounce your last name. Giaconopoulos, who is the head of our WLN program. And she says, the gender dashboard for the credit committee, is this something new for PAMECAS? Can you tell us more?
Yes, it's something new. So when we did we took a deep dive into the operational processes of each one of the 4 credit unions in the pilot. And we spoke with the credit union members. And they told us, and especially the credit committee, that they didn't know how many loans were given to women. So we've asked them what type of information they would like to see in this dashboard. And Diatou Koulibaly, who is our consultant based in Dakar, and Aïssatou Sek, who is our gender focal point based in PAMECAS, have started sketching out this dashboard, which we want to be very synthetic so they can track. Usually a credit committee meets every week, so they can track what they've done last week and have a cumulative number of how many loans, size of loans that have been deferred. Sometime a woman will come and she has a very good business, very good proposal, but more information is required. So that loan is deferred, if you will. Look at disbursements, so they can really be involved in making sure that they do have a gender lens and they do understand where they stand in the overall production goals that PAMICAS sets every year.
We have one more question, Sophie. Do women participate in financial literacy before getting loans? From Vincentus Repu.
So PAMICAS has done some financial literacy courses and exercises, and that remains one of the biggest barrier to access financial, and actually to even walk into a financial institution. So this is not something we're going to do in the toolkit, but it's definitely one of the issues that need to be addressed. Absolutely. So PAMICAS has done it. I'd be curious actually to hear from other credit union members and representatives here what their programs or plans for financial literacy have been in the past. So the last thing we're looking at in that credit process is, do men and women get the same terms under the same product? And it's a question we've recently asked ourselves, because we've noticed, for instance, that the loans women access are usually shorter. If you're a business owner and you manage to get a 6 or 9 month loan to finance a year of operations, that's not enough. So it's not enough to support your growth. And one question we're asking ourselves is, are men getting better terms in the sense of a better interest rate or longer term duration? Or we already know, for instance, that it has been easier for men to restructure the loans they have taken because of the pandemic. The reason being that their loans are bigger. Because they're bigger, they present a bigger risk to the portfolio. So it makes more economic sense to restructure these loans. But women feel that they've been put at a disadvantage because they suffer the same consequences during the pandemic than men, but we're unable to restructure these loans. So what can we do to inject a new dose of equity here? What can we do together with PAMICAS to make sure that they don't feel, that women don't feel that they're not valued and that their investment is not valued? I think we can move to the second lever on supporting women-led businesses. Megan?
So the second lever we looked at is at the business level. And the first stat that was quite interesting to us is looking at there are only 8 formal women-owned businesses accessing credit at PAMICAS versus 52 for men. And to be fair, both levels of formalization for men and women are quite low, but this is a dramatically lower level for women. In total, there are 6,000 women-owned business that are part of PAMICAS's network. And 85% of the members in informal groups are women. So, there's a stark difference here. And I'll ask Sophie to tell us about how this affects businesses and some of the solutions that we are testing.
So by staying in the informal sector, an entrepreneur usually takes herself, because it's mainly women, out of benefiting from other services. So for instance, informal businesses will not be able to access bigger loans. Moving into the formal sector will allow you to have access to bigger loans. Similarly, the legal form of business provides you with some sort of legal protection. Senegal has a limited liability corporation status that actually is quite easy to obtain and provides you some level of protection when protecting your own assets. But it's difficult to register because something we've heard many times over when we did the market assessment is a contradiction, I think, that highlights really the circumstances women entrepreneurs in Senegal find themselves in. We've heard from professionals of the financial sector that women needed to get the information they wanted. Then we've heard from professional from women's rights organization, nonprofits, or a social organization, but it's hard for women to find the information they need. So they're put in a little of a bind that the onus of getting the information is on them. And while everybody else knows that it's really hard to get this information. So one of the things we want to work with PAMECAS is to make the information available to women members of PAMECAS, and use the credit agent's relationship with these women once again to give them the information, the paperwork, where do you go, how do you do this, what documents do you need. Also, I feel that the women who are members of the credit committees, they're entrepreneurs, they have a high status, social status in their communities because they have this role, and they can be kind of pivotal roles in making sure that we make the business case to women who are in the informal sector of the advantages of moving into the formal sector. So making the business case and showing them the advantages of moving into the formal sector is one of the things we're going to work on. Of course, one of the biggest issues about moving in the formal sector is by becoming visible, you become visible to the taxman. And we've heard over and over again that one of the reasons why women didn't want to work in the formal sector was to pay taxes. And again, the government of Senegal takes really interesting measures there by passing a law a few years ago that taxed men and women at the same rate. So they got rid of this discrimination that actually put women at a higher tax rate. So everybody's afraid of taxes. Nobody likes paying taxes. So it's not really a criteria we can use. And if we use the business model and the business case to convince them of the benefits and advantages of moving into the formal sector, I think it would be very interesting. And we actually have identified one category of women in particular who are registered as agents. So they have a business license and they do international trade. They go to Dubai and to China. They buy containers of furniture, home decor, lots of things that they export back to Senegal and sell. They are registered as agents, but their business isn't. And PAMECAS actually, the team at PAMECAS actually proposes that these are the group of women that are the most likely or the easiest to work with and move them into the formal sector. So we have identified them. Sorry, Megan.
No, Sophie, I was looking for the pause. We have two questions. The first is from Grace Watsiara. Interesting the kind of data that has been generated from PAMECAS. I would like to know if this data was structured prior to the project or this has been designed during the project phase.
Our colleague Dalia Mehar, who leads the M&E portion of this project, along with Aissatou and Yatou and Nias also, who is our wizard with the databases at PAMECAS, have been working a lot on structuring the data. PAMECAS collects a lot of data through their databases, and they have been incredibly generous with getting every kind of data we've asked for. But we're going to propose to them as well to make slight tweaks so they can track the gender data in particular at the aggregate level a little bit better. But they already had enormous amounts of data in their business operating system, if you will, in their own banking system.
So this data was already being collected by PAMECAS. We just
formatted it
a bit differently, and we pulled it out for our own analysis. So our second question is from Tamara Danyansenko, who provides funding for the loans, and is savings encouraged in conjunction with the borrowing debt creation?
So our project at WOCCU is a technical assistance project. We don't provide any funding for the loans in this project. PAMECAS is, the membership provides the money for the loans as any credit union usually functions, but they also have access to grants to increase the different funds they can use to provide loans. Savings is very much encouraged. And in some cases, you also have a committed saving practice, especially for women entrepreneurs, by putting some, the collateral goes into the savings, a savings account. They have different savings account, term savings that are used as collateral for loans. PAMECAS is known to be a credit union that wants to work with women And women know this and go to PAMECAS to receive credit. And their primary reason for joining PAMECAS is to obtain loans. So increasing the saving practice would also be interesting in the sense that it would help women accumulate more wealth, therefore being able to provide collateral for bigger loans.
And then we have a comment from Vincentius Repu saying tax is the problems as here in Indonesia, but tax makes the business healthier. So we'll take that to heart. And then one last question for this section just came in from Eleonora Zgonjanin Pet. I can't see the rest of your name, I apologize. Is there data divided by age for women loan users? It's a very good question, actually.
It's a really good question because it relates to another thing that we have in the back of our mind, which is a life cycle of women's financial needs. And I don't know the answer to this question, to be honest. I do think that as a KPI, as a know your customer requirement, PAMECAS has to collect that data, and it's provided because members have to give a national identity card, which states their date of birth. But it is something we have not taken into account in our work.
But we will at some point. So I think we can go to the next section.
Yep, I'm handing it over to you.
Okay. So leadership and networking. So this is going back to the global challenge. Recently, our GWLN network did a survey of 180 credit union representatives across the globe, and noting this is not a global survey. This was a small scale survey just to understand the trends. And as you can see, for both board members and CEOs, there is a much lower than 50% female representation. So this is quite interesting data. And again, this is a small sample, and some of the North American data is a bit different than what you'd see in other surveys. So we're still trying to unpack this, but it's a starting point. And next slide, please. And then looking at the US, I always think this is an interesting trend to look at. For credit unions, the gender equity at the lower level credit unions is actually quite balanced. In fact, more females. But as you get to the larger asset value credit unions, the gender imbalance is quite stark. And this is in the US. And then coming back to Senegal, we focused in on the representation on committees, as Sophie mentioned earlier, looking at the credit committee, the board, and the supervisory boards. And the colors in the graph on the top left represent the 4 credit unions that we are working on in the pilot. And as you can see, the women's representation on the board and the supervisory board is noticeably lower. On the credit committee, you'll see credit union number 1 has a larger representation, and that gender balance is a bit more. And overall, though, within the credit unions that we looked at, there was 35% female representation on these 3 committee levels, compared to 55% of borrowers overall. And why is this? Sophie, do you want to take that? No.
Sure. In the focus group discussions we've had with women members, they first told us that sometimes they didn't know that by paying a share to become a member of the credit union, they could present themselves they could be candidates. And they didn't really know the kind of the charter of the duties and responsibilities of credit union members. And that's due because credit agents sometimes gloss over it, sometimes don't have enough time to explain that to the women. So definitely something we can work on with PAMECAS through the credit agent networks, but also, once again, through the women who are already represented in a kind of peer-to-peer education or outreach. The second thing is that they don't know they can run. They don't know that PAMECAS has elected representatives coming from their membership who help manage the organization. So it's linked to the first observation. The last one, which is both more troublesome and more common, is women tell us that they're not qualified. They feel that their level of literacy is too low for them to run. That women who are more affluent, who have more businesses, who are better known in the community, are better placed to run. And one of the issues that those institutions face is actually a lack of elected members. We know of one instance of a credit committee where a couple of members have fallen ill or are on maternity leave or cannot fulfill their duty. And that puts almost a hard stop to the work of the credit committee, who doesn't have enough alternates to actually perform its duties. So it's really critical that through networking and peer coaching and mentoring, we increase the number of women represented on those committees so that the credit unions can better perform altogether. Megan?
Actually, it's going to be me. I don't know if you can see me. Excellent. Would you care to change the slide, please? Yes. So I did want to make a shout for this is one of the ways that we're actually resolving this issue of networking and mentoring in our program. As I mentioned earlier, one of the branches of work, the work streams that we at PAMACAS offer is professional development, especially for youth and women, credit union professionals and their members. Through our initiative called the Global Women's Leadership Network, the GWLN, I'm sorry, which is, I believe, a commenter, Lena Giacopoulos, I'm sorry, I can't pronounce her name as well, mentioned earlier. She actually, this is the thing that she manages. This is an initiative. It's completely volunteer driven, that is meant to provide professional development opportunities, networking for credit unions and around the world. And you can see that it's currently active in 84 countries, 3,500 individuals. And we actually have established societies. These are groups, formalized groups. And what I mean by formalized, I mean that they are, a structured sister society group in all the countries you see highlighted in this slide. I'm actually going to hopefully she is able to join us. One of our colleagues in Senegal, Diatou Coulibaly, who is attempting to start the sister society in Senegal with PAMACAS, with our colleague Assetou Seck and Aboubacar Touré, who are also featured on this call. Diatou, are you able to chime in quickly about what it is you're all doing? Excellent.
Thanks, Dylan. Thanks for the introduction. Interesting talk since the beginning. Greetings to all the participants. I'm happy to, together with Aboubacar Touré, Aissatou Seck, and Deissa Gartal, to jump in for the next amazing networking action, GWN and WOCCU, the first sister society in a French-speaking country, my country, Senegal. And we're very proud and eager to welcome this excellent initiative here in Senegal. And also discussion together with Elena, WOCCU, Elena and I, and we discussed about how is going to be set up the launching procedure. They asked us to select the founding leaders, and if this is done, we have selected four founding leaders among the staff, senior management staff, but among also the board members. Two of them are here present. All of them are women, leaders, entrepreneurs, and willing to tie the pink. Second, we attended the virtual breakfast. This was to have an induction tour about what looks like a WLN meetings, virtual meetings, better understand the insights. Third, we had a deep talk after the virtual meeting together with the four founding leaders to discuss a little bit about how we want to structure the sister society, what we want to do inside the sister society, what kind of activities, and how we're going to raise funds to finance the first activities of the sister society. Of course, we understand that there is a compliance procedure because it's like a franchise. Sister society have the informational kit with all the procedures to follow, and for that we're looking forward to having a benchmark call with all the sister society leaders, with the GWLN, to know a little bit about the procedures to launch, because from the discussion, we had some critical points to discuss, and we would like in the fourth point, to establish a list of critical clarification to make with GWLN. First would be, what is going to be the legal structuring of the sister society? Is it going to be an association or a commercial company or an NGO or an informal group of leaders? We need to know more about that. In our idea, we want to make an association. We also want to have better activity planning with them after the benchmark calls with other sister societies leaders. We already know exactly what we want to do with women inside PAMECAS and outside PAMECAS, but all of them linked to PAMECAS. We want also to discuss with them what is legal and authorized for the fundraising activities. So this is what have been done so far. Thank you very much for your attention. If you have questions, thank you, Dylan.
Jatu, thank you. So we have 5 minutes left. Thanks everybody for the participation. We do have a Q&A, as I mentioned, there
are a couple of questions that we can answer, Dylan. That's okay.
Yep. I would like to ask if Elisa, if you're still on the call, about the Ukraine Leadership Initiative. I don't know if you're able to chime in and share. Cassie, if you could give her a microphone, that'd be great.
Sure. Hi all, in regards from Ukraine, do you hear me?
Yes, we do.
Okay, so just a couple of things we do here in Ukraine. We're the Credit for Agriculture Producers project funded by the USAID and implemented by the World Council. And the gender perspective is not the key focus of our program, but what we do is a part of one of our objectives, as we see that the leaders in the credit unions, meaning the CEOs, are half men, half women. So we have a good balance here. But in the supervisory board, as you mentioned, as a trend globally, we have the same here. We have more men than women. And if we're talking, I've mentioned that in the chat already, but if we see the agri producers and we see the female agri producers and the male ones, we see that the businesses of the female agri producers are smaller and their loans are smaller. So we see as a lack of entrepreneurship skills or leadership skills, business planning. And that's why we have started the program, the mentorship program for women credit union employees. And we have a special gender consultant here hired internally on the national level. And we have done the program, drafted the program already. We have had the first meeting, and what we see as a perspective, the cross-share of different ideas, the trainings on entrepreneurship skills, as I've mentioned, negotiations and business planning. And we hope that our pioneers among the credit union representatives who are women, they are going to actually help themselves on the credit union level. So meaning this leadership and promotion things in the credit union, as well as they will help the women entrepreneurs in their communities. So that's the thing we have started, and we hope we'll have some more time for this in June, mostly. That's our plan. So we hope that will help, and we hope that the businesses of women agri producers in Ukraine will grow, as well as the promotional opportunities and so-called pushy skills for women in credit unions will also improve. Thank you.
Thank you, Elisa. We just have a couple minutes left. I wanted to answer or address one issue that brought up by Wade Channell of collateral and some of the areas we are looking at. Wade's comment that reforms in the financial system are increasingly accepting inventory, equipment, and other movable property as valuable collateral, not just land. Secured lending systems can open credit dramatically. So this is definitely one area we're looking at with some of our partners looking at gender roles in development. So this is a really important point and something we are going to look into as well. And Dylan, did you want to close us out?
We'll close this out. Yes, thank you, Megan, Sophie, and Wade. Much appreciated for your time. Thank you all the participants today. Very glad to see the lively discussion and comments. As I mentioned in one of the chats, if you would like to connect with us, we'd love to hear from you on these 4 questions. your stories. We'd love to, this is an initiative that we consider global. It is not limited to just our little pilot project in Senegal. Gender is at the forefront of what we are trying to work with at WOCCU now. So please, and as well as credit unions globally. So please send me a message, send us a message, and we are happy to, we would love to connect with you afterwards. I want to close by giving a special thank you to USAID for being a partner on this project, and PAMACAS. You could say, I think that they deserve the most praise for being willing to take this journey with us. It's an exciting one. They've been excellent partners, and opening up their books to us, opening up their data. We really, really appreciate it, and we hope that as a partnership, we can definitely grow this initiative and moving forward. So thank you all, and have a great week.